to the cloud. All right, guys. So I look forward to kind of breaking some things down for you guys today. So today I want to make sure I'm like giving you guys the very best version of me with everything I do. So I'm gonna be very like slow and descriptive with every single, thing I break down today, because I think it's important that when you learn something like Elliott Wave, it has to be broken down in a manner where it's not going to be super duper subjective, where I tell you I do this because I like it this way, or I do this because I want it to be like this. You have to have rules when you use certain things like Elliott Wave. Very important, very crucial. I want to make sure I'm breaking down the rules for you guys. And once I'm done with this session as well, I'm going to give Jay the PDF file for all the slides that I'm using. So if you guys want to double back and have the slides and kind of have something to reference while you're rewatching it, I'll make sure he has it so he can share it with you guys inside of whatever, groups you guys are using right now. So let me go ahead and pull up my section here that I'm using. All right, it's actually right here, so this will work. I got multiple screens running at once. I'm like all over the place looking at stuff. All right, so this right here, well, I can just use that thing, that'll work. So this right here is the beginning of the slideshow that I want to kind of share with you guys, and making sure that everybody has a good understanding of what we're doing here and how this is going to play out today, because this is going to be one of those lessons where I got to kind of break things down. I may not have a chance to kind of answer every question right away. So any questions that you do have, if I don't get a chance to get them to you, make sure you put them in the chat, and I'll double back and kind of answer them as I'm going through. So that way I can kind of keep everybody on the same page, because I know it's a lot of information that I got to cover today. And I'm going to give you guys real examples in the market and everything like that. And I'm going to show you guys some of the things that you want to look for once you're getting started with Elliott Wave, all right? So in the very beginning of what we're going to look here, you have to know Elliott Wave works in consolidating markets and trending markets. You'll see these movements typically all over the place, but it's going to be very skewed in a way where a lot of times people are going to tell you the third wave has to be the longest wave in Elliott Wave. That is not necessarily true. I'm here to debunk that entire myth that you may have heard that Elliott Wave has to be the first wave. Okay, because that's not true. I know a lot of times people get kind of confused thinking if the third wave isn't the longest, then it's stupid. It's busted. It doesn't work. I'm not going to pay attention to it. But just know when you're looking at a certain kind of pattern with Elliott Wave, there are rules that have to happen. All right. So right here, just basically breaking down that wave 1, 3, and 5 effective direction of the market, right? Affect the whole direction, giving us our impulsive moves, right? We get those big moves to the upside. Just know when you're starting Elliott Wave, do not say 1 when you start. Don't go 1, 2, 3. You're doing it wrong. It's going to be 0, 1, 2, 3, 4, 5. Okay. A lot of times people say, well, this is going to be my 1, from here, I got to go 1. And they think this just means 1, 2, 3, 4. And at that point, you're all wrong from the jump. All right. So just make sure it's always 0 and then you start with 1. Same thing how we do with with the harmonic patterns. They never go like A, B, C. It's always X, then A, B, C, D. Like it kind of has to work that way as well with Elliott Wave, just to make sure you guys are all on that right thought process and that right approach. Now, waves 2 and 4 are going to be your counter moves, right? They're going to be your retracements. They're going to be where the market wants to rest inside of your movement to the upside. If there's one thing I'm pretty sure we can all agree on, is that the market can't just move in one direction with that kind of energy, just no retracements, right? If something takes a move in just one direction with no retracements, that's typically called a parabolic move. And the market likes to come back and give that move completely like a giant retracement to the downside. It almost erases the entire move. Almost real similar to what happened with Bitcoin, right? When Bitcoin went on that large run to the upside, it had a full pullback in the full year of 2018 where it just erased everything from 2017. So right now, wave 2 never moves below wave 1, meaning when we go 0 to 1, this is the first wave. 1 to 2, this is our second wave. As price drops down, wave 2 cannot break lower than wave 1. And I mean, when I say close lower, I mean as in the sense of no candles can close lower than the start of wave 1. All right. You can have price come all the way down. A wick can push below and it's still valid as long as nothing closes below. Essentially, all they want you to know is that you're making sure the market is trending. You have to have a trending market, right? If it's not trending to the upside, then don't even look for Elliott Wave. All right, wave 3 is never the shortest wave. That's one of the caveats they have. Now, people will tell you wave 3 has to be the longest. That's not necessarily true, but wave 3 can't be the shortest. You can't have a wave where wave 1 is super long. We have our pullback. Wave 3 is reasonable, and then wave 5 is huge, right? It won't work that way. At that moment, this whole scenario is all out of whack. It won't work. It won't give you the right kind of structure that you need. All right. So now wave 4 never enters wave 1. This is probably one of the most important factors inside of Elliott Wave. If you don't remember anything I'm showing you in the beginning, remember this, that wave 4, right? This move, this retracement back down cannot close lower than this high, right? So if this high was here, we had a candle pushing up, even if a wick came all the way up and came back down, price closed right at this tip, and then we start seeing price drop down. This candle that makes the end of wave 4 cannot close lower than the close of the high. Is it making sense? Clicking a little bit. Just keep it in mind where, yeah. All right, cool.
I say yes.
All right, so remember this. Inside of what we have moving here, this will help you so much further when we do what we do. Your trend lines, and I'm gonna give you guys the proper way to draw trend lines. If you do not know how to draw trend lines, there is absolute rules to draw trend lines. I am one of those people. I am absolutely crazy about trend lines. All right, I don't care if you're new, experienced, master trader, multi-millionaire. If you don't draw a trend line right, you're gonna see my hair turn like Goku orange. Like I'm gonna go straight Super Saiyan on you inside of a lesson about a wrong trend line. Like I am crazy about trend lines because I know the power behind something as simple as a trend line. All right. So when we understand that Elliott Wave is based off structure, right? Structure will always be king when we use something like this. Just know as we start making higher lows and higher highs, higher lows and higher highs, keep in mind the rules that we're looking at right now. All right. So now when we get into this Elliott Wave complete cycle, there's essentially 8 waves all together with Elliott Wave, right? We got our 5 waves to the upside, AKA our impulsive waves. And then we have our ABC corrective waves to the downside. All right. So we're going to have that 0, 1, 2, 3, 4, 5. And then we're going to have that typically it's like an X right here, but it's like an X, ABC to the downside. This is super important when you understand that these structures that happen, they won't look very clear to you when you're on certain time frames as well. And I want to make sure I'm stressing that early in the lesson. Because a lot of people say, Kurt, if I go down to the 15-minute, can I find me an Elliott Wave? Yeah, but you better prepare to see a lot of hairs turn gray because there's going to be so much movement on that 15-minute that it may not give you the structure that you're looking for. My recommendation is the higher the time frame, the stronger the structure. Pretty much everybody knows that already, right? You know, when you go to something like a daily time frame or a weekly time frame, you're going to deal with a lot of clean chart movement. It's not going to give you all that crazy, wild, sporadic movement, but it requires more patience to see those kind of trades fall into line. When you're dealing with Elliott Wave, if you remember the rules and you know that with everything that's happening in front of you is going to benefit you if you follow the structure of the market, because we can essentially gauge the type of movement we're going to get when we're in whatever phase we may be in with inside of the Elliott Wave, right? If we got our first push to the upside, pull back, and boom, we get a higher high, right? And now price pulls down and starts to turn around within the middle of this movement and move to the upside. I'll go over this with Fibonacci all the time. Me and Jay can have another lesson about fibs. I'll be in here for weeks talking about fibs with y'all, and y'all will be mind blown. Somebody's late's going to be in the parking lot. So when we talk about understanding the movement that brings the whole Elliott Wave into structure, our trend line, right? From low, high, higher, low. Once a higher high is made, we can connect our trend line from low to lower low. And now this will give us our first indicator of where we want to see price potentially turn around and push back up. Our second indicator would be a line right at the tip of 1. As long as we don't close below and we push back up again from that area, now we'll have structure here and we'll have support here, right? Our trend line and our support line will give us an idea of where we could expect to see price turn around for our Elliott Wave. All right, so now you already got your first blueprint of what to look for once you get started, right? You get your first low, high, higher, low, higher, high. Boom, we got action. We in the game now. We can start playing out some things looking for structure. Trend line, low to higher low. Then we'll find that structure right at this level as price pulls back down. As long as nothing closes below, as long as we see structure respected with our trend line, this looks like a great opportunity for a buy to the upside. Now, once we make our higher high, this is where we have to start to think a little differently. If we've already seen wave 1, wave 2, wave 3, wave 4, we insert here, boom, we get a higher high. We're in wave 5. This is where indicators come into play. They benefit you a lot. Like use something like the RSI, the MACD, the stochastic. You start looking for signs of divergence at the end of that 5th wave, okay? Because now if we got a high and a higher high, but our indicator is showing a high and a lower high. That shows we may have strength leaving this market. We may have certain things that are giving us heads up for the market to turn around and drop in our favor and begin our ABCD corrective wave. So just keep this in mind. When we get that ABC corrective wave, this is going to start to be consistent with any kind of movement that you have to the upside. Now, inside of these movements, there are fractal movements within here. And when I say fractal, think about how you look at something like a snowflake, right? You see how a snowflake has like those geometric patterns all around it. And then if you zoom in on it, on the edge of the snowflake, you'll see even more geometric patterns outside of that. If you zoomed in even further on that little piece of a snowflake, you'll see even more geometric patterns. It's just fractal, meaning the lower we go, the more of it is just more of the same thing. So with Elliott wave, just how we have this structure going to the upside, and we got the ABCD wave down, inside of this wave one, we'll have 1, 2, 3, 4, 5, and then X, ABC back down. And then 1, 2, 3, 4, 5, then X, ABC back down, right? So this is going to happen on a multitude of time frames. This is why I like to say, if you know what the higher time frames are doing, you can navigate the lower time frames with much more confidence and look for the structure to play out in your favor if you understand what you're looking at. So when you start seeing the market pull down, rise higher, make higher highs, make higher lows, everything will start to kind of fall in line with you because you say, oh, wow, this is an Elliott wave. I'm looking at the daily time frame, and all I see here is just a push to the upside, a pull back down, another push to the upside. But on that 4 hour, you got 5 waves up, right? 2 waves down, 5 waves up, and then boom, 2 waves down. So I'm sorry, 3 waves down. So it starts to benefit you much more when you think about it in that way, right? So basically just saying that motive waves, 5-wave structure are labeled as 1, 2, 3, 4, 5, AKA our impulsive waves. Our corrective waves, our wave structures that are ABC, right? The corrective waves just give us that pullback that we're looking for at any given point of time. Markets are identified somewhere within this cycle. This is where I say the higher the time frame, the easier it is to spot this kind of stuff. If you're looking on like a lower time frame, you're going to have a very difficult time. I know some of you guys may have scalping strategies. You may have, something where you trade on a half hour with a 30-minute crossover, something of that nature. You have to be careful looking for these structures on lower time frames. I will strongly suggest stick with the daily and the 4 hour if you're looking for Elliott wave. And if you trade on a lower time frame, keep all of that in mind so that way you won't get caught off guard if the market's already in a position for a potential end of the 5 wave and you got an ABCD wave coming down. You've been buying things up the whole way, the whole way to the upside. It'll give you an idea of knowing when to close out trades and take profit. Right? I tell my team all the time, you are professional trade closers. Period. Like, we're not here to ride the roller coaster. We're here to get money. So you get into this idea of if you understand where structure is and what the market's about to do, you set yourself up for greatness where no matter what happens, I'm closing my trade the moment I see structure going against what I already want. All right. And it's just important to follow the rules rather than your own opinions. Like, you will get into a scenario where you would tell yourself something. How many times you guys ever got into a trade and you knew you should have waited? Right. I'm going to ask you guys in the chat, like, give me like a 3-3-3 in the chat. If you knew you should have waited and you took the trade anyway and it went against you, right? She put 4 threes in, like, man. So this is the deal. This is the deal. When you know you're taking trades and it requires you being patient, this is where you have to have that right conversation, right? The way you talk to yourself inside of your trading makes a world of difference. Whether you're going to be successful, you're going to be, negative the entire time. Because I know sometimes you guys may enter the trade and say, man, it's like the market's only against me. Like, it's waiting for me to get in just so it can take me out the trade. Like, what is going on? Like, I get in, the moment I hit buy, this thing drops off. The moment I hit sell, it takes off, right? You start to get this mindset of, I can't get it right. And it's all about letting the market come to you and not chasing the market. Having a trading plan that plans for both scenarios. And I'll give you guys examples of what I mean when I say preparing for both scenarios, buy and sell. I'm not telling you to enter both at the same time. I'm just saying, know where your opposition lies in the market. If I'm taking these trades to the upside and I know I'm at the end of a wave 5, okay, wait a minute. I may not want to look for this to bounce down so I can buy this, right? I want to start to play this out and see what exactly am I looking for. I have 1, 2, 3, 4, 5. Ooh, this is 5 waves up. Let me be cautious and not look for this as a buy because somebody inside of here is getting trapped. And I'm being honest with you guys. This trade right here blows people's accounts. This one right here is the one that takes you out of the game altogether. You have no idea how many people quit Forex because of this position right here. All right, because you see what? Boom, higher low, higher high, higher low, higher high, higher low. Price starts pulling back up. You get excited. You thinking, whoo, I'm about to get in and get all of that gain for the next higher high. And then price, boom, boom. And this is you excited, but didn't pay attention to what was coming. All right. And I just want to make sure you guys are knowledgeable about what's happening here, because this potentially also plays out to be our what? Head and shoulder pattern that we usually see in the market. You start to get a different perspective on Elliott Wave, because most of those may be head and shoulder patterns setting up for you to get caught on the wrong side of it. But if you know how to play it, you have a different approach. Now you can start to look at things from the bank standpoint rather than the retail trader standpoint, right? Because if you understand what the banks are doing based off structure, based off movements, based off algorithms, it's a wrap. All right, so let me go ahead to the next slide here. Now, just how I told you guys that those moves are fractal and they break down into smaller movements, right? We get into a different mindset now where that initial 1, 2, 3, 4 has all the same aspects of it, but much smaller. Now, when we get that 1, 2, 3, 4, 5, and that makes up our leg 1. And then X ABC makes up our leg 2. And then 1, 2, 3, 4, 5 makes up our leg 3. And then X ABC all the way back down again. So you start to get that idea of all of these movements having those smaller fractal moves that equal out to this, but just on a smaller scale. Like this entire move all the way up and then back down is simply just up and down. You got 1 and 2 over and over and over. All right. Now, this right here is an example of how these extensions play out. And I'll make sure Jay has this so you guys will all be able to reference this and have the same exact thing I have. So it won't be something crazy where you're like, man, the market's moving. I don't understand which kind of Elliott wave I'm looking at. You can have all of this in front of you so that way you understand. Now, notice this first one to the upside, right? The first wave is the longest here, right? And if you ask anybody else in trading if this is a valid Elliott wave, they'll tell you no. No, it's not. It's not valid because the third wave is not the longest, so it can't be an Elliott wave. It's in a way that's going to be real. You can't use that one. It's wrong. I'm here to tell you it's right. You can make money on this. All right. Don't fall for the hype. All right. Yes, I did the point extra thing with the glasses. So when you start to get a better understanding of the structure of Elliott waves, notice how it has a long wave 1, right? We got our ABC movement down and then a nice size wave 3 and then another ABC movement down and then wave 5 kicks in. This is typically when you see movements like this is typically when you start to get into that mindset of this is divergence happening here because we have a high pulling down. And then when it's a higher high here, the indicator may show you a lower high because there was less strength in the buying momentum that made this higher high. And then we'll get that big ABC move back down again from this extension. Same thing here. This is the typical Elliott wave scenario that people want you to look for, right? And in my eyes, it's just not realistic to kind of set up an expectation for this to happen all the time, right? Oh, the third wave has to happen consistently in order for you to make money with Elliott wave. That's not true, right? People set you up for their own perspectives. I'm not here for that. I want to make sure you guys have all the tools you need to understand structure. So now keep in mind, notice what's happening with these levels, right? Low, high, higher low, higher high, higher low, higher high, higher low. What do we have? Structure. Our trend lines will guide us because we're trending, right? High from low, high, higher low, because this low is higher than our previous low, higher high, because this high is higher than our previous high. Now we have structure. Once you get those 1, 2, 3, 4, now you can draw your trend line. And now as long as everything stays above here, and we got our rules where the fourth wave can't come down and touch the first wave, same thing, fourth wave can't come down and touch the first wave. As long as our structure's playing out and we get our movement to the upside, we all good, baby. It's money in the bank. So now, guess what we got now? Fifth wave is the longest. Still, keep in mind with the rules, this scenario here, the third wave is not the shortest, right? The first wave is small, pulls down deep into this level, didn't close below, so we have a low, a high, still technically a higher low, because it's higher than our previous. We get a higher high, trending. Now we get our trend line out. As long as we stay above our trend line, we keep making higher lows, higher highs. Fourth wave doesn't come down to touch the first wave, and then price takes off to the upside, good to go. Okay, and this is the deal. The first clue that you're gonna get that your Elliott wave is gonna start to break and fall apart is after you get that third wave, look at your trend line like a hawk. If you can monitor that trend line and make sure that nothing breaks that trend line, that lets you know your fifth wave is still active. The moment that trend line is broken, that's your first sign that, oh, this is showing me that my fifth wave is now done because we're breaking below structure. We're running out of steam here. I could look for this next pullback to be my potential what? ABCD wave to the downside, right? You got your movement to the upside. Fifth wave is done, right? Your trend line would be here. price breaks the trend line, then when you typically get retest of a trend line, because we're looking at low, high, higher, low, higher, high, our trend line will go straight across through here. I'm seeing you guys can like imagine that trend line being there, straight across through here. Once we get that break of the trend line, price comes back, retest, drop off. And now all of that structure that you've been seeing from trend lines and Fibonacci and everything lining up is just simply Elliott waves forming. You have structure that's happening. And now guess what happens with this movement? You got your high, your low, lower high, lower low. You got 4 pieces, right? High, low, lower, low, trend line straight through. The moment this is broken, now guess what you got? More structure. Price breaks out, retest, take off, right? You see how it gets repetitive, how we can start finding the entries based off structure. I've yet to even talk about an indicator yet, right? Some of you guys in here are already making money in your head like, ooh, I know what I can do with that. That's like a Christmas tree right there. I can make some money with this. So I want to empower you guys to start really looking into this. Now, this here is showing that the extension is not identified, where you just have a movement to the upside where it's just 9 waves in one direction, right? This is very, very difficult to spot because your subjectiveness will tell you this wave's longer than this wave. No, this wave's longer than, no, this wave's longer than all. You're going to run into scenarios where this will be very difficult. My advice when you run into scenarios like this is use structure. Structure will not lead you wrong. If you have price making low, high, higher, low, higher, high, higher, low, high, just draw the trend line out. That's it. Just draw the trend line. Take your time, draw your trend lines. And here's the deal. When you draw your trend lines to the upside, let me go back here. When you draw your trend lines to the upside here and price is just running up, you can find your entries by simply just waiting for price to break the structure that is made from X, A, B, C. You'll draw your trend line from high to lower high. And once you get that break, that's your sign for your potential entry here. And just know, once you take this entry, you may not get a retest, but if you do and price comes back down and wants to retest the trend line and make another push, I'm going to give you guys tips and tricks for this so you will know how to navigate these areas for entries, because this is going to be like pivotal for you to start really gaining that confidence, because it's one thing for me to sit up here behind this little fancy green screen and act like I know everything. And it's another thing for you to implement this trade and make some money. All right. So you know me, like I'm about transparency. Like if I'm not giving you nothing that you can walk away from this session and get paid, we didn't call it trade and get paid for fun. This is real. All right. You need to be able to walk away from here, slap this stuff on the chart and say, ooh, that's why I like Jay. He put me in position to get this bag. All right. So just know you're running with the right people. Like Jay Wayne definitely got your best interest at heart. I've yet to see a brother with a better heart. I promise you. Like the dude is legit, top to bottom. All right. Transparency, like just giving you guys everything he has day after day after day, consistent with it. Listen, you're going to be hard pressed to find somebody that's going to do what he's doing. I promise you. All right. So now this here is one of those scenarios where your 5th wave in your Elliott wave doesn't make a higher high. Okay. And I want you guys to be knowledgeable about this, because this also leads us back into what potentially may benefit you, where I know Jay uses the indicator called the Martin stochastic. And this could help you if you use the Martin stochastic and you start seeing that kind of divergence after you get that nice 3rd wave to the upside. And also pay attention to what we got with structure here, right? We have a low, a high, higher low, price makes higher high, and then it pulls back down. Our trend line would have gone from low to higher low. And as it moves across, notice what happens here, right? Price is still respecting the structure that we would have had here with the trend line. Like I know I'm doing this just with the mouse, but I need you guys to kind of imagine where that trend line would be, because we're going to do real examples in a few moments. But I want to make sure I'm just showing you guys all of this. So when you double back to reference these, you'll have all the tools you need. Now, also, this is very crucial, because I know some of you guys may be dozing off right now. Keep this in mind. We got a X, A, B, C wave down, and then this has 0, 1, 2, 3, 4, 5, and then we get the drop off. If you can keep this in your mind's eye, when the market's making these movements and you have your structure here, and I know sometimes you guys, because I'm about to break you down in a minute where you guys can see. How many times you guys drawn trend lines out, and price likes to do this? He gets right on your trend line and just wants to like stutter step on the trend line, like it's doing a scribble scrabble on your trend line, and then it finally breaks. This is when you see something like this happening. And then you start to have that, ooh, this isn't noise. This is structure. This is 1, 2, 3, 4, 5. And I know after this move and after that 5th wave, and I get a break of my trend line, I can confidently take this sale knowing that structure has now been broken. I know what I'm looking for. I have what I need to know. I'm looking at the potential move of an X, A, B, C movement to the downside. All right. And it's just keeping this in your mind's eye. Okay. And notice the fourth wave didn't close lower than the first wave. All the rules lined up. Everything was what it needed to be. I'm just giving you guys every scenario that could potentially cause a problem for you when you're looking at your trade and saying, this doesn't look right. This doesn't look right. Because I know a lot of times it's so easy for us to go on Google, pull up a picture of an Elliott wave. And if you don't see those five waves up and 3 waves down, you're like, okay, this is not it. I'm done. I don't want to look at it no more. You're going to have markets that are going to be messy, right? We know the market does what it wants to every day. That's the market's a different beast every single day. If you don't have the eye to spot the structure, you're going to let a lot of good moves go to waste because you're looking for the definition of an Elliott wave when you know the market ain't going to give you that definition that Google showed you. The charts is never as pretty as Google charts. We know this. We looked at Google 100 times when we first started trading, trying to prove Jay Wayne wrong. And when you realize the brother knew what he was talking about, you left Google alone for a few months, right? So let's get this in our heads now where everything we're using now with this Elliott wave, you're going to see multiple examples of this stuff when we go look at the charts. All right. He said hard to doze off with this trading. I appreciate that, man. So same thing here to the downside, right? Structure, we got our trend line that would go from high, low, lower, high, lower, boom. Trend line's valid. Price would respect the trend line all the way through. And that very last point where price is just rubbing against your trend line, keep this in mind too. The more time price spends in an area, the weaker it becomes, right? Don't let anybody else tell you anything different. The more time that price spends in an area, the weaker it becomes. All right, I'm gonna give you guys examples of that too, because I want you guys to notice that zones where price is constantly just rubbing against it, what's happening is those orders that the bank has sitting at those levels, they're all being filled, right? You're looking at a lot of sell orders right here, right? Sell orders pushing higher, sell orders getting filled right here, sell orders getting filled right here, sell orders getting filled right here. This is telling you right now that this area right here has a lot of supply right up in here. And just notice, just before we had this area here, what do we get? Shoulder, head, shoulder, drop off. Now you got a neckline within this area, and you have a support zone, a supply zone at this area. Price comes up. These kind of zones typically cave in on themselves because price spent so much time filling all the orders here for the actual buyers and sellers. At that point, there's no more, right? There's no more buy orders, right? We had a lot of buy orders get filled here. You get the last little retest and then boom, drop off. Same thing here in reverse. Let me go over to the next slide because I want to get to some real examples so you guys can have all of that, real charting in front of you so it makes way more sense. All right, now this just kind of explains the truncation I talked about. The impulsive wave sometimes also contains truncations. Truncation is the phase where the fifth wave does not move beyond the end of the third wave, right? Doesn't make a higher high, right? The spot truncation correctly is imperative to ensure that the presumed fifth wave contains the necessary sub 5 waves. Let me go back. These are the sub waves within the bigger wave. So you have 0, 1, 2, 3, 4, 5. And on the corrected wave, we have X, A, B, C. So if we know we're inside of a corrected wave because we only got 3 waves out of this, and we start to see 5 waves forming to the upside, even though we don't make the higher high, this is still important that you know how many waves is being counted within this so you can expect to see when the drop off may occur. All right. And then truncation often occurs after a strong third wave, basically just letting you know when the market gives you that large move to the upside and then you see almost like that double top kind of action and then you get the drop off. This is typically what's happening inside of the double top. I'm just giving you guys the blueprint of how to navigate a double top, essentially, when you see that happen. All right, so all the things that you've seen and just kind of heard about and had like a casual interaction with, you're going to have much more confidence when you see them pop up in the market like, that's Elliott Wave. I got this. I know what I'm doing with this. All right. Now, these are very common, and I don't know if you guys have been paying attention to some of these or actually known how to really navigate it, but I'm going to break it down in here as well. Now, this is a diagonal ending wave where the wave 5 kind of has like a wedge formation to the upside. You got your initial, 0 to 1 to 2 to 3, right? Pull back down. Everything's lining up where 4 didn't come down to 1. And now we have 1, 2, 3 to the upside, 1, 2, 3 to the downside, 1, 2, 3 to the upside, 1, 2, 3 to the downside, 1, 2, 3 to the upside. You have all these waves moving up, but it's 5 waves of 3, right? We got 1, 2, 3, 4, 5, and then we get the break out of the structure. This is one of those scenarios where if you understand the structure still, this is where everything is going to play out for you in a much more confident manner. Now, when I break this down on the chart and you see some of these movements, you're going to be like, dude, I've been paying attention to all of this nasty looking consolidation and had no idea how to play this out. But now that you know, you can just count the way, because you're going to start seeing those little move up, a little move down, then boom at the top, and then a move down, a little move up, then boom back to the bottom, a move up, a little move down, and boom back at the top. You're going to be able to count them out when we go to the charts, and you're going to just start having those moments. So let me just box all of this up like Chinese takeout, and then I can start really benefiting myself from being patient and knowing these are the areas I'm looking to sell in, right? Anywhere inside of these kind of zones, because now you set yourself up for scenarios where I may take a sell here, but now it's traveling within my range. You see, that's a good confirmation, just structure and price action. That's the thing. When you got that price action behind you, oh my goodness. Oh my goodness. So long story short, right? The end diagonal primarily occurs in the fifth wave. This usually forms when the preceding wave has gone too fast. That's the third wave, right? This thing has been overextended, right? We get a nice pullback and then boom, price shoots back up again. And you start getting that noisy move to the upside where it doesn't want to kind of finish out where it needs to finish, where it doesn't give you a clean thrust. It just gives you a lot of up and down, and finally you get a break. All right. Volumes in diagonal diminish significantly. This is when we talk about those areas where you start seeing those divergences when you're looking at your indicators. I mean, also give you guys an indicator to use for Elliott Wave. That's very beneficial. Everybody has, you just haven't probably used it enough or used it a lot or often enough. All right. Most of the times converging diagonals form. Rarely we see that diverging diagonal. So we're just saying that when you start seeing the market converging on itself, when you set up those ranges from lows and your highs connecting, you see the market start to converge in on itself. And that's just basically what it means, are those converging diagonals, right? So leading diagonals usually occur from the first wave of an impulsive wave. So they're just saying something like this can also happen in the beginning of a wave, but we're not going to get into that. And this is just another example of this to the downside, where you have those movements where the moment it starts running into these areas here. Keep this in mind when you start seeing these movements happen at the ends, right? When we got a nice move to the downside and it starts to kind of give you that long static movement here. Same thing here to the upside. All this is telling you is that the buyers are showing a lot of strength. Keep this in mind, because I want you guys to remember this. The buyers are showing a lot of strength because we're getting consistent what? Higher lows over and over and over, and we're getting higher highs, right? So don't let this confuse you when you think, oh man, this thing's going to drop off any day now. Keep in mind that you can ride this and still make a good amount of money within this before it breaks out, because the initial break will be so clear to you where you will have your structure levels. And once it breaks, boom, you got your answer. You don't have to guess. You're not going to be confused. And all your entries be well below where price is going to break out anyway. Same thing here. This is just showing a lot. The sellers have a lot of strength where we're getting lower high, lower low, lower high, lower low. And then we'll get that break to the outside of this area of structure. And you may see a nice quick, ABCD to the upside and then another push right back down again due to how strong this third wave is. The strength of this wave sets up all of the movement after, just so you know this. Like, this is a sign that the market is in absolute swing. And now when it pulls back, you'll find more buyers waiting within here after a nice little X, A, B, C, and then boom, to the upside. So keep these in mind when you start seeing the sideways movements like this inside of that, trending market. All right. Now, Elliott Wave motion, Elliott Wave motive wave diagonal just breaks down the same thing we just talked about. Diagonal wave, motive wave is not an impulsive wave. In this wave 4 almost enters this is the next for the next one. This is for the next one we're about to go into. Let me just go to it and show you what I mean. The slide got moved around a little bit. So they talk about inside of the corrective waves, or let me make sure. No, that was for the last one. I'm sorry. I apologize. This is talking about how that fourth wave almost enters the first wave price territory within those diagonals. Right here, it's talking about how the fourth wave here will enter the first wave here when we see those markets moving up, pulling down. So even inside of this, even though it's a count of 5, the consolidating side of this, that fourth wave will break into that first wave and break that rule inside of this scenario only. So just keep that in mind when you're looking at those. That's really one of the only things I want to talk about. Even we talked about how there's 5 waves of 3 where you got those 3 up, 3 down, 3 up, 3 down, and you finally get the break. Primarily 2 types of diagonals is leading and ending. We only talked about the ending, not the leading. All right. And here, this is where we get like really deep into the corrective wave side of things, even to the downside, right? When the market's correcting, after we get those 5 waves up, there's still 5 waves pulling down in that initial first wave. So you got the X, ABC. But even then, this is still 1, 2, 3, 4, 5, right? 1, 2, 3 corrective wave, and then 1, 2, 3, 4, 5 back down again. Zigzag is the first type of corrective structure made up of 3 waves, right? We got 1, 2, 3. And inside of that follows a 5, 3, 5 wave where we have 5 inside of the first wave, 3 inside of the second wave, and then 5 again inside of the third. Breaks all of that down. Zigzag has a sharp look and then excuse me, and then occurred normally within the second wave of an impulsive wave. Basically just breaking down anytime we see the 2 and the 4 wave when price is pulling back down again, right? We just talked about those in the previous ones. It's going to look something like this. It's that nice little 5 wave down, 3 wave up, 5 wave down again. All right. And same thing here. This is a little different where inside of this corrective structure, you have almost like a consolidating motion. This brings me to that point of when you start seeing consolidation, this kind of pattern is going to make you a lot of money if you know what you're doing. All right. And it just requires you have patience because you're going to see this maybe like 3 to 4 times after we're done with this. And, you know, sometimes throughout the year, you're going to see Elliott Wave structures happen and you're going to become absolutely frustrated because you're going to want a trending market because to the eye, it's appealing. You got higher highs, higher lows, or lower lows and lower highs. You can draw the trend line. Everything looks cute and pretty. You can put a little bow on it. But when you're looking at consolidating markets, it becomes a lot more confusing. And the confusion is you don't want to wait. I'll say it again. The confusion is you don't want to exercise patience. I'll say it again. The confusion is you're having an inner conversation saying, I got bills, it's birthdays, Christmas is on the way. I don't feel like waiting for this. I want to get in right now. I want to make my money right now. You have to get out of that mindset when you see consolidation. Or you run into a scenario where consolidation scares you and you don't want to trade it because you don't see that trending structure that makes sense to you. Or the third school of thought, you get confused every time it moves with inside of the consolidation. You think it's about to break out here. Oh, it's going to break out here. Oh, it's going to break out here. You gauge every one of these as little baby trends and you want to keep trying to find an entry within the baby trend. The rule of consolidation is, and I'm going to say this very slowly, don't diddle in the middle, okay? So when you see consolidation, you want to mark this up, right? You want to get a bottom, you want to find your top, and you're going to wait for price to come back to these areas. And you're only going to take a trade then, and only then will you do analysis, and only then will you do risk management at the edges. This is where the big money's waiting. You want to jump in where big money is. You don't want to get inside of here and get caught because we know price doesn't have to come back up to the upside. It doesn't have to come back down once we enter at the top, right? I mean, once we enter in the middle. So I would rather you be at the top and have a very small margin of error, where if you're wrong, you're going to know you're wrong like that. Price is going to break out of there, stop you out, done, right? And if we're using proper risk management, 1 loss isn't going to hurt us. 2 losses isn't going to hurt us. But if we break out of structure, guess what we can do now? Trend line, structure, find entries, gang time, look for Elliott Wave. What a concept. So you start to get a better understanding of being patient is going to pay, right? Less is more when you're looking for certain structures, right? So this corrective wave here is a flat kind of structure made up of 3 waves, ABC, right? It has a 3-3-5 structure where the first wave is 3, the second wave is 3, and the last wave is 5. Wave B basically terminates near the beginning, the origin of wave A, basically the beginning of wave A. So we have our beginning point of wave A, our X to A, and then price pulls back up. It won't make a higher high from this point because we know this is typically the end of wave 5 as well. So we know price can pull up to this area, drop off. It almost kind of makes you think about the other situation we just looked at when the market pulled up on the wave 5 and didn't break higher than wave 3. But this scenario all plays out where, and I'm gonna give you guys multiple examples, even inside of harmonic patterns, how this plays out. Because you'll see harmonic ratios where price is gonna go from X to A to B to C, and you're gonna start thinking about Elliott Wave when you look at those. Because this is the beautiful part of having something like the harmonic scanner where it does all the work for you. Like stuff I sit up and do all day and all night with my squad, and we looking at the scanner and I'm putting these trades up, or I'm just marking up trades and I'm looking at harmonic patterns form even on smaller time frames or larger time frames like the weekly. And we're gauging these things saying, okay, for the next week, we can see price moving to the upside. So let's look for buy opportunities because the bias is on the buy side for this harmonic pattern on a weekly time frame. And then we double back and we're like, oh, the scanner just called a buy. Let's go. Or another scanner just called another buy. Boom, let's go. And we're riding these things over and over and over. And all we're doing is looking at Elliott Wave and looking at just the fib levels. And we're not looking at any indicators. We're just finding structure points. over and over and over, finding our entries, over and over and over, finding our entries to the upside, to the downside. Okay, if price is going to pull back down, it has to stop here. If it doesn't, it's going to invalidate the Elliott wave. And at that point, this trade is going to be, this whole scenario is all off whack. So let's be patient, see what price does. We find entry points, game time, 600 pip move, 700 pip move, over. And you want to make sure you're doing these things with the right approach, not from a rushing standpoint, not from anything where I got to get it, I got to have it. You're letting the market come to you. All right. Wave C terminates near the point of wave A, meaning this C point, right, the end of wave C is going to end just around the beginning point, right, of this area here. I'm sorry, the terminating point of wave A, because this is the end of wave A, the beginning of wave B, the end of wave B, the beginning of wave C. So price will come down here and terminate right around the beginning of this point. And this is just counting out the waves, right? 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3, 4, 5 back down. All right. And now let me go over to the next one here. This one here, and this, I'm being transparent with you guys. This one is probably one of the more difficult ones to spot. Okay. So I would not suggest you guys like get to looking for these, but this will help you understand consolidation sometimes too. When you start seeing consolidating markets start to kind of coil in on themselves, and you're like, how do I navigate this? Like, what do I do to stay profitable in something like this? Like, how do I know how to trade this? You have to have a certain level of knowing how far your range is. And if it's descending or like converging in on itself, your approach has to be very methodical, where once price moves a certain level, right, and starts pulling back, and you got a 3-wave structure, you got, your first move up, a pullback, and then boom, you made a higher high. You have to know, okay, from this point, I have to play these out the right way. Because say if you took an entry here, right, and price starts moving to the upside, pulls back down, and then boom, makes a higher high, you have to start looking for any sign of reversal. You're out. That's how you play these. You cannot think, oh, I'm going to just keep riding until it finally breaks out, because this thing can break to the downside just as fast. And I'm being transparent with you because I've seen them get inside of these areas and you get 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3 down, 1, 2, 3 up. And this thing will hit one more time and then turn around on you, right? And break back to the downside. You're thinking, but it did everything the diagram said. Take the movement that you know it wants to give you and then just ride this out. And once it breaks out of those structures, then we'll start looking for better entries, because we'll have what? Trend lines, structure. We know how to play all of this out the right way. All right. Now, right here is just saying that 2 types of converging triangles and contracting triangles. Sometimes you have them that converge in, you have some that actually converge to the outside and then open up a little more. I think the next one is an example of that. So yeah, right here is a great example where you'll see price moving in the direction, pulls back down, and we get the 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3 down, 1, 2, 3 up. And you see it's 5, right? We got 1, 2, 3, 4, 5, and then boom, we're out. Same thing here. We have our level of price where it went flat here. And notice how this is playing out, right? Where price is pushing to the upside. And this is funny because this right here, this example is exactly what people thought was going to happen on Bitcoin. Everybody thought Bitcoin made that huge run up in 2017, pulled back down in 2018. All of this noise 2018 gave, and they thought it was going to just boom, take off to the upside. And what do? Pull one of these movements, broke even lower. Okay, so I'm just telling you guys, if you know what you're looking for within the movement, right, before we get our movements that break out of here, because we got our 1, 2, 3 down, 1, 2, 3 up. If you know how to look for these and play these out right, you will have a great time as a trader just knowing what to look for inside of the market. Now, this right here is another one of those running triangles. I'm not really going to go deep into this example because I don't want to have you guys like do an analysis on these, because these are very hard to trade. Same way I was just breaking down with these back here. These are very hard to trade if you're not used to trading consolidation. It requires another level of discipline and patience, knowing that your entries are only going to be at the tops and the bottoms. All of this noise, you have to let it go. That's the advice. You don't want to find entries within this because you have no idea how far some of these moves will be. And I don't want you guys to have substantial drawdown just trying to jump into something because you're excited. So only at the edges will we find our entries. And your risk management is stop losses are just on the other side, right? Just on the other side. If price breaks out and makes a higher high, you don't have to be upset about it because now you've seen structure, right? Price broke out and made a higher high. Oh man, I can start looking for trend lines now. I can start looking for a trending market. I can start trading this a whole nother way now. I may have gotten stopped out, but now the opportunities have increased in my favor because price is now trending. Okay, so you start to get a better understanding of how to really play the market. Like sometimes you have to just put yourself in a position where even if it's risky, the risk to reward is in your favor. So if you do get stopped out, and I only risk like 1 to 2% of my account per setup, period. And I'll give you guys examples of that too when we get to the chart. So right here, like I said, I don't really want to go too deep into this. This is just a running triangle as a form of a triangle corrective pattern. It's made up of a ABCDE pattern where you get that 1, 2, 3 down, 1, 2, 3 up, right? And you go 1, 2, 3, 4, 5 inside of a corrective wave. It follows like the same thing we saw earlier with the 5 waves of 3. It's one of those scenarios where if you start seeing consistent waves of 3, start looking for 5 of those before you get a breakout. That's just the best advice. But I wouldn't suggest you guys really get like excited about looking for these. It's just going to help you start to navigate consolidation. All right. And this is just another diagram of, zigzags. What you expect to see. The first wave is going to be 5. The second one's going to be 3. The last one's going to be 5. The flat one's going to be a little different. You got a wave 3 down, a wave 3 up, and then a wave 3 at 5 to end it. And then here is just showing you that triangle where it's just 5 waves of 3. Right. And I'll make sure Jay gets all of this. And this one here is just a combination wave. I didn't even want to add this one into the slide because it's too advanced and it kind of confuses most new people because it goes against a lot of the other things we were just talking about. Because you run into a combination wave where you may get a full Elliott wave within the correction, and it's too much extra to even go into. So right here is just one of those things where we see the initial 0, 1, 2, 3, 4, 5 up, and then X, A, B, C down. And then here is just more fractal of that, right? The same thing, looking at it all over again. We got 1, 2, 3, 4, 5, and then 1, 2, 3 down, 1, 2, 4, 5, 1, 3 down. And it shows even inside of this, more fractal waves equal out to maybe 21, right? We got 1, 3, 4, 5 going to the upside, then 1, 2, 3 going down, 1, 3, 4, 5, and all this equals about 21 waves. So you start to look at markets, and then the lower the time frames you go, because think about it, when you run a daily, it'll look something like this. You go to the 4 hour, it'll look something like this. You go to the hour, it looks something like this. And then we go down even lower to like, the half hour and 15 minute, it gets absolutely ludicrous where the structure is just so fractalized and just crystallized where it's hard to even find anything that looks remotely like clean structure. All right. Because your best bet in something like this is just what? A trend line that can save you a headache and a half when you have all of this marked up. But when you go to the higher time frame, it looks like this. And like, oh, this is beautiful. I can trade this all day long. But sometimes you get that itch and you don't want to wait. You want to go to the hour because you think the hour is making more money, but the hour is just showing you more movement. And you kind of confuse and you convince yourself that movement equals money. And that's not true. Lots of movement does not equal great entries. Lots of movement does not equal great setups. Okay, so when we get into idea of structure equals great movement, structure equals great setups, we're just looking for the market to get into our structure points, right? Those high friction zones where our trend lines are, those high friction zones where we start seeing the market start to turn around and pull back, and where the rules tell us 4 can't close down below 1, right? This area can't close below this area. This area can't break lower than this area. So we have certain rules that we can play out and know we have an advantage because we're waiting for the market to show us it wants to obey the rules. And just drawing trend lines, flags, right? Keeping everything boxed into these zones, making sure once we get a breakout, we know how to navigate them. All righty. Now, this is one of those examples right here, not a live example, but just one of those examples where you get your initial 0 to 1, right? 1 to 2, 2 to 3 to the upside. And now we can do what? Draw our trend line, structures where it needs to be, right? Talking about fibs, pulling down in the 50%, 618 zones. I'll show you guys all of that in a moment as well. But just seeing how from low to high, price pulling down to that 50%, 618 zone gives us that first area we can start seeing price turn around and push to the upside. Even here, when you look left, that level of structure all within this zone kind of gives more strength to this area being strong as an area for a retracement to happen and push up in our favor. Kind of builds that confidence to take these kind of situations over and over and over again. This one here, it just shows that 0, 1, 2, 3, 4, 5 to the downside. Everything makes sense here. 4 never even came close to 1. And now we have that potential ABC corrective wave here. And then we can see what another drop back down to the downside from this movement. So just one of those things where you get a quick understanding of how this works. And typically when you see this, this could be the setup for another move. Usually what happens at the end of the 5th wave is you get either consolidation or you'll have a lot of just, up and down that gives you one of those 1, 2, 3 to the upside, 1, 2, 3 to the downside. Also, notice what kind of movement we got here, right? 1, 2, 3, 4, 5, right? And then you get that 1, 2, 3 to the upside. So these happen all the time, just making sure you see that kind of structure behind everything. And your trend line is where it needs to be, from high, low, lower high. Once this candle right here made a lower low, that trend line was valid going all the way through. Price would have been beautiful. And once we got that breakout, we could potentially say a breakout, retest, takeoff, if we wanted to do it that way as well. All right, and this right here just brings me to like another part of my analysis where this says Elliott Wave Oscillator, but essentially this is just like a MACD with the histogram up. And I want you guys to notice what it's showing you inside of this movement. Now for the untrained eye, this may look like a little bit of noise and it's hard to kind of see it. But I want you guys to kind of take away your bias and really look at what the indicator is showing you. And then look at what the candles are showing you too. Right here, we have our 1. So we got 0, 1, 2, 3, 4, 5. Just keep an eye on this area here. When price pulls down to 2, right, it didn't close lower than 1, right? So that was valid. When price comes down to 4, 4 didn't come down to 1. So that makes this valid as well. Also, look at what this potential MACD histogram area is showing us here. From 0 to 1, we got a flip, right? From the 0 point line where it goes from red to green, we went flip from 0 to 1, right? So we got our first wave. Price pulls down to 2. Now, right here, I know you guys are saying, why wouldn't this be 3 and then 4 and then 5, right? And then that's the end correcting down. What happened here was from 2 pulling up into this area here, even with what this happened here, with this area here, we did not make a lower low. So this area essentially was almost like just consolidation. And then we had that 0, 1, 2, and then from this point began 3. From here, all the way from this point was 3, right? So 1, 2, all the way from 3 to the beginning of 3 to the end of 3, beginning of 4 to the end of 4, beginning of 5 to the end of 5, and then here, boom, boom, boom. So just notice that we never got a lower low. This means this area here still is valid because this was our low, creating our 2, and then from here starts 3. I'm sorry, ending our 2, and then if we would have got a lower low, 2 would have had to got moved down, right? But even if we got a lower low, it brought us probably too close to this area here. So structure is all lined up. Structure is all lined up, and you see what's happening here with all the indicator giving you that heads up. So this is why I'm sharing this with you, because I want you guys to see, like, you don't have to have the eye to see it right away. You can use something like the MACD to give you that heads up. Whenever the 0 point line starts to flip over and over and over, we can start looking for the ends and the beginning points of our waves, right? Also, notice what happens from wave 3 pulling down into wave 4. We never got a break of the 0 point line, but we got a nice retracement down. Structure was nice. And then boom, price pulls up, makes a higher high. Did we get a higher high at wave 5 here? Did you see a higher high? So we got a high, lower high, high, higher high. Ooh, divergence. The strength was weaker in the 5th wave. It couldn't push as high as wave 3. It gave you the first sign that the sellers were going to show up because we didn't make a higher high on the indicator. This is what's going to start to shift that mindset of the market's about to turn around and I'm about to get caught off guard. I'm in my 5th wave. I see the market pushing higher. I got 1 point. Think of and count the peaks, right? High, high, higher high. So we got 1 high, 2 high, 3 high. So boom, 1, 2, 3, 4, 5. Once you get those 3 highs, right? The 3 kings. Now we know price is ready to drop off. And then when we get to that 5th high, that 3rd high, right? We got high, high, high. That 3rd high, which essentially is our 5th wave. Guess what happens? Weakness, it's a wrap. So you have to kind of get out of the wheelhouse of the market's going to keep running to the upside. The market's ready to keep going to the upside. Draw out your trend lines, right? You got your structure here, low, high, higher, low, higher, high. Boom, trend line was here. What did price do? The moment price broke below your trend line, it showed you that the trend was already weakening. It wasn't making a higher push. And once you got that break, everything shifted on the 0 point line. And now, you know, you're potentially looking at the the X, A, B, C, and then boom, consolidation. The market's resting now until it begins a new trend. So everything you see is all lining up for you. Everything you see is working for you, right? It's happening for you, not to you. All right. So just keeping all of this in mind and everything all lined up. Let me go ahead and back us out of that. Let's go check out some charts now. All right. So what do we have here? Boom. This is a great example of what I want to see. Like, let's see. We got, what is this? 0, 1, 2, 3, 4, 5. And let me just pull up a MACD real quick so we can kind of layer that on top. I think I have one on the NVT set up. Yep. Get rid of NVT for a moment. So right here, right? Let's play this whole scenario out. I'm going to go ahead and count these out with the wave counter so that way I won't like put my bias on it, right? So we got our 0 point line right here. excuse me, my mic keeps scratching my beard. So we got 1, right? Because I'm looking at this, right? That's our 0 to 1. And then boom, 2 right here, pulling all the way up to this point here. Let's say this high point here to 3 to 4 and then to 5 right there, right? Now, would this be valid? Would this be valid? Absolutely not, because what's happening? Our fourth wave is closing down by, there you go. There you go. So you start to see.
I was about to call you out on that if you ain't call it.
But no, that's the thing. Like, I want you guys to see it, even when it's invalid, right? Even when this move is happening here, and I'm just doing something fractal right now because I know this is like a much larger move. But even when it's invalid here, you still see that structure that's playing out over and over and over. And let's just say if I decided to just play all of this out, right? I just wanted to go ahead and play all of this out. My trend line would go from low to high, higher low. Once price made a higher high, it closed higher than these candles here, I want to put my trend line at the origin of my higher high. Boom, there we go right there. And as price keeps making moves, making higher highs, your trend line has to continue moving with price. So now once a higher high is made here, I could have did this right here. Boom, set it up just like that. Price pulled back down, broke below structure, came back above, respected, and then all of a sudden, boom, takes off and makes a higher high with this candle here. I do the same thing all over again. Boom,
hey, bro, so
right there.
Oh, that's out cold, bro. So now, for everybody on the team right now, he just said move the trend line to the origin of the higher high.
Absolutely. Absolutely.
That clicked with me.
Oh, yeah, because that origin is giving you the structure that the market wants to continue following. The origin is creating a trajectory that the market wants to follow now. So guess what happens when our origin points, like right here, was our new origin point, because this was the creation of our new higher high, because it's higher than these levels. Once that area of structure hit, what did price do? Came right back to retest this area, pulls up, breaks down, retest, drop off. Right? And this is where your structure starts to benefit you moving forward. Now, Elliott Wave is basically an expansion of what trend lines are already showing you, right? So you start to get into something like support and resistance, you get into supply and demand, that's an expansion of support and resistance. So when you simply master something like trend lines and you start slapping Elliott Wave on top of that, oh my goodness. Oh my goodness. Like, let's go to a daily time frame and see if we can find some more structure to work with right here. All right, so I want to find something that's trending so we can have like a really good example. All right, something like this, right? This is a nice little movement here where we have high, low, lower high, lower low, lower high, lower low, and then we have a little bit of consolidation after it, right? So let me go ahead and draw a trend line on that real quick. All right, from high to low. And right here, price made a lower low. This is the origin of that lower low. Right? And then price pulls up, goes sideways, boom, makes a new lower low. Got to reevaluate. Trend line goes here now. And now you see what happens with structure, right? Price respected, drop lower. And the moment we got that break, we knew what to expect. That was it. We didn't have to second guess it. We knew how structure was going to play out because we can't reevaluate. And it's the thing. Once you get to a point where it's a low, lower high, and then right here makes a boom, a low right here. Like, I want to show you guys how this works because it's so beautiful when it plays out all the way out in front of you. All right, this area here made a low, price pulled up, dropped down, made a lower low right here. I know a lot of times you say, well, I can just move it right here, right? Yeah, but I wouldn't have you do that. I would tell you keep it here because this is the origin of this entire little, sideways movement you have. Like, yeah, it's making some sharp movements and pulling back, but this high was the origin of all of this movement that even dropped down to this point. So until I have something pulling back up into structure, testing and making a lower low, this is the last origin point I have to work with. Until I have a price pull up high and then boom, makes a new low, I don't have a new origin. I can't remove my trend line. I can't reevaluate my trend line. Structure's where it needs to be. All right.
So let me ask you something.
Yes.
So you see how they was pulling back up, but they wasn't near close to the trend line.
Yeah.
That's what you're saying. So we want something to pull more closer towards the trend line.
Yeah, you want to see price pull back up to retest the trend line because your trend line essentially is your friction point. This is where you want to see friction. It's going to tell you what the market truly wants to do when it gets back to these friction points, because when the market's moving fast, it's moving in a frictionless zone. Like there's no resistance, there's no support. It's zooming, it's traveling. When it runs into an area where there's friction, you want to know where that is so that way you have a better understanding of how to navigate that movement. If you don't know how to navigate friction points, you run into a scenario where the market's going to just willy-nilly you and you ain't going to have an idea on how to deal with it, right? Because if it's structure, right, if I'm looking at high, low, lower high, lower low, oh my goodness, trend line, it's valid. The rules have been obeyed, boom, boom. That's it. And as the market keeps making what? Lower high, lower low, lower high, lower low. Like right here, there weren't really any lower lows at this level here. Like price was closing right on those levels. When this dropped down and made a lower low, now I can reevaluate this to this point here, boom, trend line. And now I have to let this play out. Price is going to do what it's doing. What did it do? Came back to structure, retested, sideways movement, almost came back again to retest. And people say, well, if it's not giving me all the movement I want, what should I do? You have to be patient and know structure is where it needs to be. These are friction points in the market, and you have to let structure play out. This would have been an amazing buy opportunity just by simply letting price come back to retest that level. And it wouldn't have been hard. Now, let me go back over here to the example of the Elliott wave real quick. From our high point, right, low, down to this point, all right, there. And this is pretty much all the way down to that point. Or I could have reevaluated this point a little further over, but just letting this play out, because this is one of those scenarios where that fifth wave, let me go back over to that example for you right here. That fifth wave is the longest wave, right, to the downside. Move that over and bring that back up. Where were we? Right there. This fifth wave right here is the longest point here. And you see all of the 1, 2, 3 to the downside, 1, 2, 3 right here, 1, 2, 3 to the downside. And all of a sudden, boom, you get the break to the upside for the ABC corrective, right? X, A, B, C. And then you deal with the consolidation after. Let me just play out the ABC for you so you can see that one too. Right here. So you start to get a better understanding of the movements that's taking place inside of the structure. And it's just letting the market breathe. And this is the thing for me. When I trade, I love using fibs because it kind of cleans up a lot of the noise that the market creates. So for me, I like looking at levels in the Fibonacci where it goes from swing high down to swing low. And the 50% 618 zone is typically where you'll see me finding my entry. So here's a little, pro tip. Wherever you in your fib, that's the kind of trade you're looking for. So if I went from high to low, I'm looking for the market to continue dropping off because I'm looking for a sell opportunity. I'm looking for my sell within the 50% to 618 zone. Right inside of here is my sell area. This is how I do my markups. So when I'm setting up for a trade, I want to see price get inside of this zone. I'm looking at structure. I'm saying, ooh, we got 5 waves down, 3 waves up. This is like a good place we can look for a sell opportunity. 1% of my trade is at the 50%, 1% of my account. I'm sorry, 1% of my account is at the 50%, 1% of my account is at the 618. You see the kind of entries we get in here off of these levels on a daily time frame. So, and the thing is for me, I like to see structure pull back down into areas where I know I may see opposition come into my trade. So just how I know this was the last low and I found this going to the downside, here's the part where it confuses people. If I know this works to the downside, I know that the buyers want to come in the same way I came into this trade. So if I go from swing low to swing high where these wicks are right here, and I know that the buyers may want to come in the same spot I got in, the buyers may want to come in right here, 50% 618 to the upside right here for them. And this is how I know exactly where to get out of the trade, how I know where to get into the trade, how I know where my opposition's coming in to stop me out. Right here was the first place I knew the buyers wanted to come back in. Because just how I went from high to low, 50% 618, I went from low to high, 50% 618. And this is the kind of movement you get. I mean, you can see this thing just going straight across, where structure has been like right across here the whole time, where price has been trying to break below and just keeps testing it. So understanding certain levels of structure, understanding where your opposition lies in the market. I mean, how many pips is this movement here? Just from there down to that point. That is, yeah, that's ridiculous, right? You're looking at, this is 50 pips, 100 pips, 200 pips, 300 pips, 400 pips, 500, 700 pips to the downside on Japanese yen, on Canadian dollar, Japanese yen. All right, it took us some days to get it, but 700 pips, hey, listen, that ain't nothing to toot your nose up at. So understanding that the structure is where it needs to be. You just got to make sure that you're reading it the right way and knowing that from high, low, lower, high, lower, low, like all these things from low, high, higher, low, higher, high, knowing where to draw your trend lines, knowing how to have structure played out. Move all these drawing tools. You have to take time to really kind of go into these markets with the right mindset and the right approach, right? Like just something like this is incredibly ugly. And I'm just going to do it again for you guys so you can see it. But this is how it's going to look. You have to prepare yourself if you want to start really looking for structure. It's not always going to be clean, right? Down to this point here, price pulls all the way up to this point here. Let me drop that off for a second and reevaluate that. There we go. Right here. Oh, this is beautiful. Beautiful. Tell me that don't make sense to you guys right now, because I'm about to bring another example up. I need you guys to let me know if you're seeing this. Let me remove some of these slides I got going on right here. Where is the example? I just was looking at that one. Oh my goodness, I just had it up there. Sorry, I'm trying to find this one example of this chart right here, because I know I just was looking at it. Sheesh. Where did I put it? Where did I put it? That's corrective. That's corrective. Here we go, right here. My bad, guys. This one right here. This is a beautiful example of what I'm talking about. All right, let me just scoot this chart over some, and you guys can see what I mean here. Notice what I'm talking about when I say the structure, right? Everything here played out with the whole, right? Large third wave, right? Large third wave, price pulls back down, and then the fifth wave didn't close higher than the third wave, and we got 0, 1, 2, 3, 4, 5, 0, 1, 2, 3, 4, 5, drop off, right? And then what I told you guys, excuse me, with the trend line playing out here, everything moving to the upside, structure playing out, right? This was the origin of our highest point right there. Price closes down below our structure, respects it, came back for a retest, drops off exponentially at that point. Like everything I talked to you guys about with the structure was right there in front of you. All right, same thing here. Same scenario, right? You got your, let me just move this over a little bit. Right here, you got that 1, 2, 3 to the downside, and then 1, 2, 3, 4, 5 back to the upside. This right here was just a very long drawn out thing here where you just got 1, 2, 3, 4, I'm sorry, 0, 1, 2, 3, 4, 5 inside of this wave, and then 1, 2, 3 down, and then those 5 waves right here, and then the drop off. Like just being able to like have the examples just so you guys can see it. So I'm gonna make sure Jay does get all these slides and you guys will be able to use it and have everything you need. I'm not gonna go like super duper long with everything, but I want to make sure I'm covering everything I need to cover for you guys. Also, let me do this while we are here. All right. Here we go. This right here is going to start to benefit you guys so much moving forward, right? If we understand that there's these levels of structure, right, within the market, keep this in mind, right? If the market's making these big moves to the upside, right, those large those 5 wave moves from 0 all the way to, 5, and then we get the corrective wave down, you're essentially looking at a Gartley pattern form, right? And Gartley patterns, oh my goodness, they land almost like 70% of the time, almost 80% of the time. So if I understand that, and I'm looking at these patterns take place, and I'm looking at the ratios from X to A, right? Pull back down to the 618 zone, price pulls back up to the 382 to the 886, and then drops down to a point of maybe the 786 zone here, or an extension of the 127. This is a horrible example. Let me go to a better example of this. This thing is not what I'm looking for. There we go. Much better. Pull back down, 618, pulls up, 382, 886. And then from this move here, when C drops all the way back down, I want you guys to really use your eyes here. Notice what happens in the beginning move. All we have is our X to A move, right? Price moved up really fast. When it pulls back down into structure, that's our ABC move down. And then we can see another potential ABC move up, I'm gonna go ahead and pull out another Elliott wave example for you guys. We just talked about how the different corrective waves that we can run into with the Elliott wave, right? We have potential 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3, 4, 5 back down. And notice everything inside of this corrective movement happened within the initial swing. No higher highs, no lower lows. This is why harmonics are so powerful, because when you understand that all I'm looking for is a 50% 618 zone, wait a minute, and I'm looking at an 886 382 zone. So anything pulling up into this area before it drops off, we can see another move back down. Wait a minute, hold up. Let me look at something for y'all real quick. Let me go look at this GBP pair on a weekly time frame for you real quick, because I need you guys to see something real fast, because you may not believe me if I don't show you in real time. There we go. We have our initial move from low to high right inside of here, right? 50% 618 zone, price stops just within that area, that level, a slight break below, and then boom, pulls back up. Okay, that made sense. That lined up with the Gartley, right? Because we're looking at 50% 618, right? 50% 618 zone, boom, price pulls back up. It has to go between the 382 and the 886 of this move now for the swing down. Wait a minute. That can't be right if price does that. That would be too much like right. We can almost make some money on that on a weekly time frame, right? So now price pulls up 382, 886. This whole gray box price is within that area. So now the Gartley pattern is pretty much ready to form. We're looking at this last leg to start dropping off now for the Great British Pound. Wait a minute, hold on. You're not telling me that this thing's about to drop off out of this area potentially to come all the way back down almost 1,200 pips. That would be absolutely crazy for structure to do that, because since August, we've been buying it up. And now we're at the area where I can see price potentially reverse now. Wait a minute. That would be crazy. So now you're telling me if I went from X to A, back to X, to high, low, back to high for my extension, the 127 is where I want to see price land. And if I pulled up the initial swing movement, because all of this movement is taking place within the initial swing we have here, everything inside of here is still making noise within the first movement. Now I'm saying if price comes down to the 786 zone right inside of here, or the 127, let me go back to my Gartley pattern right here, the 786 zone, or the 127 of this extension of A, B to A right here, and this move here. So you telling me all I got to do is see if price drops off and comes all the way back down into this box, and I start looking for buy opportunities all over again? That's absolutely crazy. But wait a minute, can I simplify that? Wait a minute, that would be crazy if I could just simplify this whole thing. Oh my goodness. Oh my goodness. No way did that just happen on a weekly time frame right in front of us. That is no way that's possible, that we just went from all of these movements back to, oh my God, come on a weekly time frame? No, that's impossible. It can't be that easy. Yeah, it is. We've been using this thing like crazy since last year. Oh, this is the only pair I really trade is GBP CAD. This is happening right now in front of us. This is an active chart. This isn't something I've reversed. This is a weekly chart that's playing all of this out directly in front of us right now. Okay. I'm just sharing this with you guys because I want you guys to be able to see all of this movement. And notice what we got. 1, 2, 3 up, 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3. Like, come on, y'all. Come on, y'all. Like, you see the movement. You see the movement. I don't have to make none of this stuff up. I'm showing you guys in real time. This is crazy amounts of pips being had in real time. Structure, Elliott wave, higher time frame, knowing how to navigate the whole thing out and playing this stuff out like a violin. Like you have to give it time so it starts to click for you. And I hope you guys can rewatch this video and kind of gain some things from the different examples and how you can start to use this and benefit yourself. But just know, like, everything I'm doing is literally just structure based now. Like, I rarely use indicators. I'm rarely pulling up anything else outside of just looking at the price action, drawing up my levels and seeing what price does near certain zones. Even right now, I'm looking at this thing saying the moment we come screaming out of here, we may see a huge sell candle for the GBP pairs real soon. because all of them are lining up for that big drop off, and then it kind of goes along with the narrative of, oh, Brexit got pushed back to October. We may see more of a let's get away from the pound right now because it isn't doing much. All right, but next time we do a session, I'll talk to Jay about putting something together for just like a straight up Fibonacci, you know, overall, like top to bottom with the retracement tool, with the extension tool, and then I'll throw Elliott Wave on top of that, and you guys can really start to see how even inside of these waves to the upside, I was able to make money in these too, because I'm gonna show you guys a real slick little trick I use. I told you I like to enter on the 50% to 618 zone with my fib, right? Swing high, swing low to swing high, right here. My entry was right here inside this box to the upside, right inside of there. I'm gonna go ahead and remove this fib so you guys can see what that looks like. Right inside of there, I didn't even get price coming back down into that zone. Once price start making higher highs and trending back to the upside, I'm looking for buy opportunities now. Same thing all over again. Swing low, swing high, entry zone, 50%, 618. Right inside of here, I'm looking for price to turn around right within that zone. I'm on a weekly chart, ladies and gentlemen. This is where the areas I'm starting to look for buy opportunities inside of that, right? Price starts booming to the upside, making higher highs. Now I'm looking at it saying I've already gotten 2 moves to the upside. I know this is the end of the 5th wave. Price may want to turn around from here. Let me play this out right. Let me do my extension where I go from low. And I typically take my take profits on my extensions are at the 127 before I even do this, so you guys will know. So from low to high, back down to the low, right here. This was my take profit right here. This 127 was my take profit. So you're looking at a move where from this entry here to this take profit right here, that's over 1,100 pips. Quick, fast, like no hesitation, no doubt, no second guessing. The market's going to finish in my area because I've made a higher high on these higher time frames. I'm going to take everything the market gives me. And then when you draw your trend lines out from low to high, everything's playing out. What'd you say, bro?
Your screen locked out. Didn't get to see that take profit 127 highlight.
Oh, let me see. Can you guys see me now? Or is it back or did it mess up? Are we good? Can you guys see me?
All right.
Yeah.
There you go.
Okay, cool. All right. So let me see if my internet's good. Yeah, we good. All right. So with the extension right here from low to high. Now, a lot of people tell you when you do your extensions, you got to bring it back to the end of the retracement because that's where the market wants you to put the extension. No, it does not. The market does not care about this little movement here. All the market cares about is the impulsive wave. The entire wave, the entire impulsive move we got from low to high. That's why we go back to the low. And then we find where our extension is the 127. The reason why I use the 127 as my take profit is because I know the market loves this level when it comes to structure. When you look at most of the harmonic patterns, they use the 127, the 141, and the 1618. I just gauged all of these on my extension, so that way I know if price does make a high inside of these areas, anything turning around from these zones is typically huge drop-off momentum. So I look for sales also after my extensions are hit. I look for strong sell momentum, especially at the end of a 5th wave as well. So understanding that, that's why I said I'll take my entry from something like this. My exit here at the 127, that's over 1,100 pips, right? And this is on a weekly time frame. So you start to find multiple trades for buys within this, and you know where your targets are on a weekly time frame. So when I understand that, I'm not telling you I leave my every single trade in for weeks and months and weeks and months. What I'm doing is I'm taking majority of my trades off the table, and I may leave a trade in with like 20 cents still in the market for like a month and just let it run because I know the spread's not going, the swap isn't going to kill me. And if I'm going to get the substantial movement I need, that 20-cent trade may turn into a real nice $700 trade or a $500 trade, but I've already gotten what I wanted. And I'm looking at it where if a 20-cent trade turns into a $500 profit for me, and that's just anyway money because I've already gotten what I wanted from my standard lot size or lower, like I'm fine with that. I'm not in here losing my mind over some of these positions. Plus, it gives me more equity when I'm taking other positions because I'm not in the red though I'm about to enter a trade. Like I can always close out a portion of another trade and say, you know what, I'm good. This one's already so far in profit. I don't have to second guess what I'm doing now. Like my risk management is much more beneficial. So I'm gonna go down to the 4 hour and let me go to my play chart here. So I'm gonna just break down a typical scenario for me of what I do when I'm looking at a setup, because I don't trade the London session any longer like that. I'm not real, keen on jumping in on those kind of markets. Like I don't really care for the not so much the London session. I just don't care for the waiting up for movement. Like I have my alert set and I'm just waiting for the market to get in position of my zone, so then I know how to play it. Like that's all I care about is just the setup. All right, so let's just go to like the whole deal, like, because this thing's been just booming to the upside like crazy. But if I look at something like this whole movement here, right, this whole uptrend here, my typical setup or my typical day of trading is something like this, where I'm finding a low point, a high point, price is already pulling back down. I'm excited because I know I'm in the area for a potential entry. So from low to high, right, this is what I'm looking for. I'll set up my zone here for where my buys are going to be had, right within this area here. And my stop loss, I'm going to move this anyway, is just below this red line at the purple line right here. This red line is my conviction line. This purple line here is where my stop loss actually is. I've seen price come down and test this area multiple times. So for me, I have to be very cautious in what I do and give myself enough room for the market to roam and breathe. Now, I have an entry here at this area to 50%. I have an entry here at the 618. So 1% of my account is entered at both of these areas. The second position is larger because from here to here, it's about 100, and this is a daily, or 4 hour anyway. So this is 171 pips, right? So I know this is a lot of movement for most people on a GBP pair. Most people can't handle that. I can, deal with that kind of movement because it doesn't bother me as much. Like if I take a $1 lot size on this, I'm only risking $100 or $170. So for me, it's like, that's not the end of the world if I have a trade that goes $170 in a hole. Like, okay, whatever. But for other people, that may be a more scary place to trade. So they may take a trade where it's 50-cent position. So in that case, it's cut in half, right? So now we're looking at something that won't even be close. They may be looking at what, maybe $80, $70, $75, something like that. Or if they break it even lower, so they'd be like, I don't know, 20 cent a trade, right? Now they're looking at maybe $40 risk for this trade. So we're looking at a trade that's maybe 20 cent per pip, $40, risk at this point right here. And then you think about it where, okay, if $40 is too much, you may want to cut even lower. You may want to go down to something like 10 cents, right? Where you're looking at this saying, okay, this thing may be $17 in the hole for me if I lose this trade. But you start to set up for the movement and not so much of the distance, because now you're telling yourself, I can lose $17 if this trade goes against me with a 10-cent lot size. I can handle that. That's not the end of the world for my account, right? What if you put 20 cents in? Okay, I'm going to lose potentially maybe $30 bucks, like $34, $35. Okay, so you're setting yourself up for a scenario where you know what you're expecting. Now, once price starts to come down into these areas and I have my risk management all set up where it's only equaling out to 1% of my account, cool, great, awesome, I'm not tripping. I can handle whatever comes after that. Price starts to move in my favor. I'm looking at the market saying, where's the first place that the sellers may come in and push me back down? Just how I went from low to high, I do the same thing. I go from high to low right here. And now I'm looking for this area as an area of friction for me to have to break through that zone, because I know that's where the sellers are looking to take me out. Also, my conviction line is right here. This is where I know once price breaks this red line, this is when I know the buyers are going to be dominant, period. And you can see the structure already, like flat out. Like it's not hard to see once we draw this whole thing out. So, and I call this other trade my devil's advocate scenario, right? This is me playing devil's advocate, seeing where's the first place the seller's going to take me out? Where am I going to see consolidation happen or potential reversal on my trade? This is the first place. So now when I see price get into this area, like I may be in profit, but I know how to navigate my profit now. And now I see price break out of this area, pull back in and respect it. Didn't want to break back below, nothing but wicks, testing within this zone. Like these areas are absolutely all on purpose. And I'm going to tell you guys why these areas are on purpose, because you may be thinking, yeah, Kurt, you lucked up in one trade. That's just how it goes. This happens to me way more than I care to speak on. But I'm going to go back here and share with you guys the reason why this happens so much. Right here is the reason why. If you Google high frequency trading, right? High frequency trading is a program trading platform that uses powerful computers to transact large numbers of orders in fractions of a second. It uses complex algorithms to analyze multiple markets and execute orders based on the market conditions. When I tell you, I feel like I've cracked the code when I did this. I understood that fibs were coded into the algorithm. So I understood 50%, 618 are deciding zones for the market, whether it's going to turn around or finish dropping off. So when I understood that, and I figured that the odds were in my favor within these sweet spot zones from 50% 618, 50% 618, I started doing them in both areas where I would take the buy and I would do the same thing in reverse. But then I noticed the 786 was where the areas where I would start seeing really strong movements once price broke below where I was potentially going to get stopped out at. So I'm thinking, okay, if I take a buy here, I wonder if somebody wants to take a sell against where would they be looking to take that sell? Right inside of this zone. But that 786 area was where the algorithms made their decisions. Once I saw price start closing on the other side of 786, it was like, woo, look at the kind of movement I'm getting after the 786. And then I noticed once I start going up in profit, I've made a higher high. I can go back and do the same thing with my swing low, right? My extension, swing high, back to swing low again. And this is my take profit at the 127 over and over and over again. So I got into a rhythm with this, a groove, and I'm thinking to myself, this is actually pretty fun. This is actually kind of simple. So let me do this all over again, right? So I'm thinking, all right, the market had moved up right here. Boom, let's see if we can find another scenario. And the market kind of tails on itself after a while, but then I start thinking about Elliott Wave and the movements that's happening and how can I play this out and benefit from all these different movements. So let me just start to do the same thing here, right? From high to low with this movement here. And then I noticed right at my areas of conviction right here and where my sweet spot zone was right here for the sell, right? This is the area I'm looking to take a sell in. This is my conviction area. The purple line is where my stop loss is. It came right up to that area and turned around as it typically does. But notice what's happening here. Price comes up to conviction. It makes a decision and decided to go the other way. And then I start noticing, okay, high, low, lower high. Well, once I got a low and price is pulling back up, I can do the same thing in reverse. And I play devil's advocate on this one too, to see if the sellers are going to show back up and give me more strength to the downside, right? So I'm looking at the same scenario, 50%, 618 is where I want to take my sell right within this box. Come on, y'all. This is the same thing I do over and over and over. And boom, price turns around. I'm like, this is silly. And it's just lower low. Okay, well, I got trend lines. I can draw that out and set what I need up. Now, I don't have any structure from high to low, lower high. There's no lower low, but I do have high, low, lower high, boom, lower low. I got some structure I can work with here. There we go. So now with my structure I have here, what does price do with structure? Respects, 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 drops off, respects, 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 drops off. I got my first break. Now I know my trend is done. My sale is over. Now I'm start looking for buy opportunities because the momentum has shifted now. So you guys are seeing like what I do firsthand and every time I'm trading, like it's not hard. You just have to understand what you're looking at and how to navigate it. All right. Same thing here. When price made that high, low, and then it made that lower high, I could have done the same thing here, looking for an extension to find my take profit on these two setups for the sale. High, low, right? Back to the high, right inside of here. My take profit potentially would have been right here at this 127 area right there. Oh, drop this right there. That line. Come on, y'all. What else y'all want me to talk about? Y'all like macaroni and cheese too? All right. So I'm gonna end this right here. I don't want to go too much further with the fibs and everything because we were all about Elliott Wave today, but I just wanted to share with you guys what I'm doing and how I'm looking at this stuff and how I'm playing everything out where I'm looking at the movements. You say cheesecake, man, cheesecake on point. Y'all about to make me go grab something real quick. So just seeing the movement and seeing how this all plays out and how we can actually use Elliott Wave mixed in with structure and just simply having trend lines in the right areas, the right places, understanding how to navigate the market and use all the tools you have in front of you the right way. I strongly suggest you guys take opportunity to really look at Elliott Wave. Now, Elliott Wave, like I said before, is subjective. So we're all going to see something different. It's difficult to kind of trade Elliott Wave and communicate with other people about it. But when you know that there's rules attached to the Elliott Wave and that you can just simply say, okay, if I know my rules dictate that the fourth wave, right? Let me just make that big. The fourth wave can't close lower than the first wave. Then I'm looking at structure, right? I know that there's going to be situations where I may have 3 waves down, 5 waves up, but this wave may not go higher than this wave. Let me be prepared for that as well. You start to set yourself up for all the right scenarios, and you do it with confidence. Because once you approach every trade with confidence, it just grows and grows and grows. Jay, you've been in the car the whole time, bro. You've been on the road, man.
Hey, I just came from the golf store, though. I had to buy me some clubs and stuff.
Oh my goodness, you done got a bit by the golf bug hard, boy. Brandon says, thanks for the value. I've been using the sweet spots for fibs. Cool, man. I appreciate it. I'm glad you're using the fibs, man. Like that sweet spot zone is crazy mixed in with the conviction. So just definitely take time with it. Be patient. The higher time frames are going to benefit you. I would strongly suggest if you're going to mark up a daily with fibs, don't look for the entry there. Look for the zone to find reversals. Like you want to start looking for that area within that daily fib, because the problem with marking up a daily fib is you have a much larger zone. You have a much larger zone that you're dealing with. So if I went to like the daily and I said, I don't know, like swing high, swing low. We use that little quick example. All right, from this area, from nice push up to the downside and a drop off here. And then I decided to use this as an area where I want to sell within this zone here. You don't want to just set a trade at those levels on a daily. You just want to go inside of this area here and start looking for the turnaround zones on a lower time frame, right? You want to go like to the 4 hour, right? Let's just try to assess where that area is. I know it's a little further back. Boom, there we go. So now within this area, you want to start looking for sales within this 4 hour zone, right? So you like, okay, if price is up in here and I know price wants to drop off from this area, let me start finding some areas where I can look for sales, right? Let me find a high point, a low point, and start looking for that, right? So something small like a high point here, a low point here within that area. And even with price breaking up higher within that area, let me see, 50%, 618, right within this little zone for a sale, your conviction line was a little bit, yeah, it got violated, but this is the deal too. I want you to notice what kind of candles stopped you out in this trade if you took a sale here, right? Big movement up, big movement down. Essentially, these two candles deleted everything that this candle gave you. So you're looking at a false breakout to the upside and another drop down. And even still with this movement from the high to low, price pull back up, it still gave you another opportunity to take this high, this low, right here. We can just move this sweet spot zone to that area right there. And you still got the same kind of opportunity to look for a sale within the area that you want to see price drop off from. And then once we got the drop off, we could do the same thing all over again, right? I could have took the same high, low point, price broke out of this area and it retested the bottom, high, low point, 50%, 618, right inside this area. Let's find the sale inside of here too. Boom. Perfect. Mortal Kombat. Perfect. So not Street Fighter, my bad. So this is where you start to get into that confidence zone. He said, would you use the conviction line from the larger time frame or the smaller? The higher the time frame, I love using conviction lines because that larger time frame is what the banks are looking at. And if I know that the banks are looking at that, and this is the deal with those, let me go back to that example real quick for you guys. With these high frequency trading bots, these algorithms, having fibs coded into it, having moving averages coded into it, understanding that the banks, and the thing is, the people who code these, they don't even trade. They just know algorithms. They know numbers. And they use Fibonacci because Fibonacci is one of those sequences that's constantly repeating and the market's repetitive. So they code Fibonacci into it to just keep that movement rolling. And that 786 is a very strong level for those algorithms to shift their momentum and their opinions. So if I'm looking at a higher time frame like the daily, right, and I'm looking at, those levels get hit, because I just do another one for you right here. Let me just remove all of this off again. Right here, right? Same scenario. Swing high, swing low, right here. If this is my conviction line right here, look how price reacts to it once it gets close to it. Like it gets rejected once, right? Let me remove this fib. It gets rejected once, and once it hits this level, it automatically makes a decision to boom to the upside, right? And now when price comes back, we have a different movement now. This conviction line isn't as powerful because we've already made multiple swings now, right? Price pull down, pull back up. Let me show you guys something again. A new fib from low to high, right? Reevaluate our conviction line right here. Look what price does when it gets back to the conviction line again. Makes another decision at the 786. These are where the algorithms are going to start to shift momentum within these areas. Like when you get used to drawing these fibs, If you have your conviction line, you are going to crack up when you see how the market just starts going on a fritz right near the 786. It's almost like the code breaks down and it starts making a decision right in front of you. And you just see huge movements right from those areas. But notice we're on a daily. We're looking at big movements from these areas. Every time we went swing low, swing high, right? Just 786 on, boom, other side. Let's do it. Let's do it all over again at this level over here. Right? Swing high, swing low with this whole scenario here. Right? Draw out our conviction line right at this level here. Why is price acting like that right at that level? And it finally breaks to the upside. It tested it, finally broke it, showed buyer conviction. And now look what's going to happen. Let me just remove this. Look what's going to happen now. We got a whole new swing all over again. Swing low, swing high, up here. Put our conviction line right down here. And our sweet spot zone at the 50% 618 zone right here for a potential buy. If price wants to boom from this area, that's where it's going to do it. If not, we're going to get a break below this zone and a test of conviction. This is how you simplify noise in the market. Easy. And then on top of that, we got structure. We got lows, highs, higher lows, higher highs, right? Right at the beginning of that area there. What is price doing at the level right now? Everything is lined up. So now we could expect to see friction within this zone. We can expect to see breakouts within this zone. We can expect to see breakdowns within this zone. Like everything you want to see is lining up. We got high, low, lower high. Did price make a lower low right here? Absolutely did. So now guess what we get to do? High point, take it to the origin, boom. You got price trapped. It's going to tell you what it wants to do real fast because you got structure. You got fibs. You got the algorithms on your side. You got structure on your side. And now when we're looking at everything, we still looking at the harmonics where we're saying, sorry, not harmonics, we're looking at the Elliott wave where we're saying we got everything we need right in front of us where we count out all these different waves in these different levels. We may get one more push to the upside and then another drop off from here. Because essentially this is just a lot of sideways noise. So I want to see if we can get some structure forming, creating some waves to the upside. All right, I'm gonna go ahead and end the recording because I know you got a lot of stuff to chop up if you decide to make this some smaller chunks here.
Yeah,
Hopefully
we'll
you
have
guys
to
got some value
separate
from it.
the fibs from the Elliot.
There you go. There you go.
Hey, so what I was